Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report, where we'll try to look for the best trading setups on the market and we'll try to earn some decent money. We start with the calendar, as always. Okay, first platform, but let me show you the calendar. What we are having here, Wednesday, overnight, maybe I will do this. Overnight we had GDP from Australia, very good one, 1%, and Australian dollar is going up thanks to this data today. What is more, we are going to have data from Canada, so watch out for the Canadian dollar. And that would be it. And obviously data have EIA crude oil stocks change. But the calendar is not very busy today. So let's do some serious trading. First we need to sort out those instruments that we had previously on the chart, and then we will focus on others. Now we will do the live analysis of other instruments. So first one is American dollar to Swiss franc, where I'm waiting for the breakout of the upper line of this flag and this horizontal resistance, because that will trigger us a buy signal. But as for now, we did a third test of this horizontal support. There is still, unfortunately for the buyers, there is still a selling pressure. So that's not the best setup for the buyers. We will get buy signal, but first the price needs to get above the green area here. Before that, there is a potential, but there is no buy signal here yet. British pound to American dollar broke the horizontal resistance. We had almost a very good setup here when the price was bouncing from this horizontal resistance, but today the price is pushing higher, and actually we tested that broken resistance as a closest support, and test is positive. As you can see now, the price is climbing higher. So that is very, very positive. Euro to Swiss franc. We had a sell signal yesterday because the price broke those uptrend lines, but now the price is climbing higher. And actually it's due to the informations that we will get a termination, well, talks about termination of QE, and the interest rate rises by 2019 and all that stuff, which for me as a technical trader is not relevant, but I just need to explain you what's going on the markets. So on Euro to Swiss franc, that can be considered as a false breakout, and in this case we should get a very strong buy signal here on this instrument. Let me check if the price is following the Fibos. Well, we can say it is, but there is a problem here. If we should take this stop or this stop, that's not a big difference. I don't think we should use Fibonacci's on this instrument at all. But that being said, that's a false breakout, seems so, and that's a buy signal. Euro to American dollar, that was a false breakout, but the price did not care. They bounced from this support, dynamic support. They broke this resistance again, and now it seems like a strong, legitimate, sustainable buy signal. In this case, we will have a resistance here. Broken resistance becomes support, and the price is climbing higher. Makes sense. and most probably we are having this scenario now in play. Now instruments where it's getting exciting. Australian dollar to American dollar, British pound to Canadian dollar, and British pound to Japanese dollar, which I analyzed for the Trading Sniper video. So that was absolutely beautiful here. So what happened here is we had a breakout of the horizontal resistance here, and then we tested that resistance as a support. We tested that resistance as a support here, and the price created a hammer and reversed. So that hammer was a beautiful buy signal, which was additionally, well, we obviously got help from the fundamental side, so better GDP data from Australia. The price went higher and reached what? Midterm downtrend line here. So now actually it's a good place to sell, but the thing is that we need to see a definite reversal here. So that's a good place to sell, but for sell we need to see a bearish price action, but that's also a good place to buy, not here but above the subtrend line. So here we play two scenarios: a breakout of this downtrend line, a breakout of the red line will trigger us a buy signal. On the other hand, bounce from this red line will trigger us a sell signal. Will trigger us a signal to go short. As for now, there are more chances for a short position, but it's hard to tell now. I think we need to wait for more information, for more precise data here, for more price action to be able to estimate that the price should go up or down. Now British pound to Canadian dollar. Oh, that was a very good setup. Why I didn't open position before getting online here, because we had a nice bounce, we had a reversal, and now the price is creating a very positive candle in the first 10 minutes of this H1. About this setup I was telling you yesterday. So inverse head and shoulder formation, left shoulder, head and right shoulder, broken neckline tested as a support, so that's a legitimate buy signal with the potential target here on 38.2. so if you buy here, stop loss is here 66, 170. That's a desirable risk to reward ratio here. So stop loss 60 pips, take profit 170. Actually, I think we can try with a long position here. Okay, we need to set the stop loss. Stop loss is very small. It's 0.5%. Gonna be better safe, like 500 euros. So yes, we do have a position here now, and I'm waiting for a further upswing. I explain you why. There is an inverse head and shoulder formation. There is a bounce from the horizontal support. There is a bullish reaction. The price climbs higher. Everything looks nice. Okay, we can move to the next instrument. Okay, wait a little bit. Okay. Next instrument is British pound to Japanese yen. Okay, wait. Here. Here. Wait a little bit, I'm sorry. Okay, British pound to Japanese yen. What we have on British pound to Japanese yen is a breakout of two horizontal resistances. So yesterday I was thinking about the price touching that resistance and making maybe a reversal price pattern, for example, or candlestick pattern. But the price went significantly higher. Well, yesterday and today. So there was no bearish price action here. But we are getting to the combination of three important resistances. So here we had two. Those did not work out. We have other three. First one is downtrend line here, midterm downtrend line. Second one is the upper line of the flag, which is still here. And the third one is the long-term uptrend line. As you can see, this in black. And if the previous one didn't work out, maybe this one will. Because this resistance looks legitimate. But for the sell signal, what we need to see the price bouncing from this level. And that's the beauty of the price action trading. You do not assume that something will happen, you just wait for it to happen. If it will, you trade. If it will not, you do not trade. Simple as that. And this is my outlook on British pound to Japanese yen. On New Zealand dollar to Japanese yen, we still have a positive situation after this false breakout, and we should see a continuation of this movement, aiming at least this resistance here. So that's a very good buy signal, but the thing is, I'm not following that because the risk to reward ratio is now too bad, because I don't see a good place for a stop loss order. Like if I would get a right shoulder here and then an upswing, I would buy here, place stop loss here, and then maybe it would be interesting occasion. But so far, no. You always need to think if it's worth to open this position, if this position has good risk to reward ratio. American dollar to Japanese yen broke the horizontal resistance, and well, we do have a buy signal here. Not much to add. Maybe what we can add is this downtrend line here, okay, like that. This line is the aim for now. In terms of the risk to reward ratio, well, it's not the best. You buy here, stop loss here, so you buy here, stop loss here, or maybe you want to play it like that. Then it makes sense if, like hourly candle, for example, the surge started here, so you buy here, stop loss here, or maybe below daily lows. It makes more sense. 32 pips. Take profit 100. Okay, then it makes sense. It can be a decent trading occasion. Yes, it's quite good, especially that we do have inverse head and shoulder formation, left shoulder head and right shoulder. That's interesting. American dollar to Canadian dollar. Australian dollar to Canadian dollar, I'm sorry. The last H4 is not encouraging. but the thing is that we broke the horizontal resistance and we're fighting on another horizontal resistance. It looks like buyers won this situation because they climbed higher and now they are using this area as a support. It can be a promising setup to go long, but we need to see price closing above those highs. Once we will see the price closing above those highs, we'll have a good buy signal. Euro to New Zealand dollar. I'm patiently waiting for a breakout of the lower line. Lower line was defended again, which means that there is a support here, so traders recognize this level as a support, which is good for the technical situation, because if there is a support here, it means that below this area we do have some stop loss orders, and maybe we'll have an activation of those stop loss orders. Once we'll have a breakout, activation of those orders should give us a movement which should accelerate and give us more bullish power, bearish power here. I'm sorry. That's the euro to New Zealand dollar. We ended our analysis on that instrument. Euro to New Zealand dollar here. So now New Zealand dollar to Canadian dollar. Let's analyze a few more instruments. New Zealand dollar to Canadian dollar drop reversal. We are getting closer and closer to important horizontal resistance, which is here exactly. I'm wondering if it's in line with Fibos. No, it's not. It's between 61.8 and 50, so it's not so relevant. That's a daily chart. Yesterday candle on the daily chart looks promising for the sellers. We may be getting closer to the end of this bullish correction here. And there's no sell signal here yet, but there will be a sell signal once the price will break that lower line of the flag formation, because yes, that is a beautiful flag. I will leave those Fibos. We'll see if those Fibos even worked in the short term. 23.6 worked, 38.2 worked at some point, yes, so, and 50 works as well. So maybe Fibos are more important than those horizontal areas. So I'm gonna keep it as it is. Also interesting thing is right now on the chart, left shoulder head and right shoulder. That's a neckline. Breakout of that neckline will trigger us a movement towards 38.2. New Zealand dollar to Swiss franc. So I'm leaving this setup because it's quite interesting. Next one is New Zealand dollar to Swiss franc. That's kind of inverse head and shoulder formation, maybe not the prettiest one, but still. But as you can see on daily chart, we are in the middle of the sideways trend, so movements in the middle of the sideways trends are more or less random. So I'm just gonna skip this instrument, because in trading we are looking for the trades which are more probable than possible, because trading is a game of probabilities. What I like here, and this is a false breakout here. I'm wondering if there is a false breakout above 38.2. That is interesting. American dollar to Danish crown. Here there is this horizontal support, which could broken. Now maybe it's a bit too early to go with sell, because we have a small comeback. but it definitely looks promising. So this instrument comes back to on my radar because I had it for some time before, and I was watching this instrument closely, and it was following the price action principles. So I see no problem with this instrument following those principles again. That's the target. About the principles, look. Head and shoulder, left shoulder, head, right shoulder, breakout, horizontal triangle, breakout of the triangle, upswing. So this instrument follows those rules, and actually that would be beautiful if we would get something like this. A drop, maybe different color, a reversal like this, for example, and a shoulder formation. That would be really, really good to see this. I'm leaving it. American dollar to Singaporean dollar. That setup was that pair was very similar to American dollar to Danish crown recently, and it's not different here as well. Here we also do have a sell signal. There is a breakout of this trend line. The Fibos. We came back below 23.6. We had the sideways trend, which ended with a bearish breakout. So there is this horizontal support. When the price will break that horizontal support, we will have a legitimate sell signal on American dollar to Singaporean dollar. British pound to New Zealand dollar now. Broken up trend line on a daily chart. On H4 chart, horizontal support. No trading setup yet. We are getting ready for this double bottom formation. But this bothers me that it's not so technical. Maybe something like that. Inverse head and shoulder formation. As you can see, this setup is very similar to this one, but this one is more clear, in my opinion. Looks a bit better than this one. And British pound to Singaporean dollar. This one looks better. Triple bottom formation left or inverse head and shoulder formation, left shoulder head and right shoulder reversal. Potentially a very interesting setup. But I'm gonna leave it because I have better setups on my chart, on my platform. It's getting interesting on American dollar to Russian ruble. That is a support. That is a resistance. 1, 2. And we are waiting for either a breakout of the upper line of this triangle or the lower line of this triangle. Yes. Once we get a breakout, we will receive a trading signal. Now gold. Gold broke this horizontal support, used that as a resistance, and I don't have good information. I don't have good news for the buyers. The only good news for the buyers is the price being above the uptrend line. Okay, fair enough, that's nice. But the selling pressure here is very big. Steep downtrend line. Only the breakout of the horizontal resistance here can save the buyers on gold and trigger a buy signal. Price breaking the long-term uptrend line will be catastrophic for the buyers. Actually, we need to adjust it like that. That is a proper long-term uptrend line in this case. Maybe WTI oil. I like this instrument because we also do have an interesting situation here. What is interesting here is this uptrend line, first one. This one, I guess, it's more relevant. I know. Horizontal resistance, very, very important. Why? Because it was respected already twice. Here, here, and then it got broken. So that is definitely a negative sign for oil and can bring us a stronger correction. Let's try to estimate how deep we can go. 38.2 seems a reasonable area, but this, for example, it's around 58.4. Let's say seems also like a good idea, and 60. This area in general around 38.2, but also from those lows from the end of February. That is a good place where the price can reverse. Okay, my friends, we did some old analysis of all the instruments, well, old from yesterday. We analyzed new instruments from today. I hope you enjoyed this daily analytical report. And now we're gonna have short break, half an hour, and after that we'll have a webinar about fundamental analysis. I hope you will all attend this webinar. So thank you very much for coming here, and see you in half an hour.